Welcome back. What we're going to be doing right now is taking a look at the paycheck of this hypothetical teacher, Tom. And so for this part of the lecture, it'll be helpful if you have his pay stub up on another tab in your browser. It's fine if you don't because we'll be going over it in the slides as well. But for this person, Tom the teacher, what we know is that he was given an initial salary offer of $41,000 per year. And what we have is one example of one of his biweekly paychecks. And on this biweekly paycheck, he earned a little over $1,000. So what we want to know, so we can start to budget for Tom, is how much is he making in a year? Well, as a conservative estimate, we can take $1,063, which is his paycheck, and multiply it by 26. Because if he's paid bi-weekly, there are 26 paychecks in a year. And that's gonna get us about $27,000. $27,638 to be exact. And right away, we should notice that this is a lot less than $41,000. But, like I said, this is kind of a conservative estimate. We have another way of calculating his yearly take-home pay because we're given more information on this pay stub. And one example of that additional information is his year-to-date pay. And in the year-to-date, and keep in mind this is an August paycheck, he's earned about $25,000. So we can take that amount and divide it by 8, the number of months he's had in the year so far, and then multiply that by 12, and that gets us about 37,500. So there's a couple things to note. One, both these numbers are much less than $41,000 a year. And two, these two numbers are very far apart from one another. So what's the discrepancy? Why are these estimates so far apart? And the reason is because your paycheck has taxes and deductions taken from it, these deductions aren't necessarily stable throughout the year. They can change throughout the year. And in particular for Tom the teacher, we're going to see he only pays union dues during the school year. So let's now take a look at his actual budget and try and figure out how much he's taking home in a year so we can budget for him. Take a look at his actual paycheck, I meant to say. So, just briefly looking over this, it's important to note the difference between total pay and net pay, and the importance in taxable gross. So taxable gross is the dollars that you're taxed on, which means some of these deductions you are not necessarily taxed on. Some of them are tax-free. But he's losing about a third of his paycheck each month to these deductions. I should also point out, year to date, Y to D is over on this side. And so just the monthly paycheck is over on this side. What are deductions? Deductions are money that's taken from your paycheck before you get your paycheck. Tom has 6. FICA, which is Social Security and Medicare, federal tax, state tax. We can see he has his health plan and his insurance. Some of these are unique and might not apply to you. Some states don't have state income tax, notably Florida and Texas. But as we are calculating our own personal budgets, it'll be useful to explore what some potential deductions are. Deductions are subtracted from your gross pay, the amount that you are earning before these deductions, and that's how you get your net pay. And usually, these deductions are clearly spelled out. So let's go back to Tom's paycheck and see what some of these examples. So again, this is just Tom's paycheck, and his deductions are spelled out here. One thing to note going forward is he has one additional deduction that wasn't deducted in the month of August, and we'll talk about what that is in a second. So with an eye towards our own budgets, let's first start by talking about the deductions that everyone has taken out of their paychecks. Accounts that everyone pays into, no matter what, no questions asked. And the first is Social Security and Medicare. And all this is a transfer payment. You pay into the pot now, you receive from these pots later. And a lot of people are worried that these pots won't exist when we're older. And as an economist, let me tell you, that is not the concern. The concern is, above all, rising healthcare costs and the environment. But just with an eye towards budget, because all we know now is that you have to pay into this no matter what. Let's look at what these amounts are. And it amounts to a little more than 7% of your paycheck. Every paycheck, a little more than 7% is going to be taken out. And to break it down, it's 1.45% of your paycheck goes into the Medicare pot, 6.2% of your paycheck goes into the Social Security pot. This contribution is matched by your employer. They pay 1.5% of your paycheck into Medicare pot. They pay 6.2% of your paycheck into the Social Security pot. Put together, this is 7.65%. So, what happens if you're self-employed, if you are your own boss, if you're running your own business, if you're an entrepreneur? Well, too bad. You're both the employer and the employee. You're paying both. This means you're paying 2.9% of your paycheck in Medicare costs and 12.4% of your paycheck in Social Security costs. Let's return to this railway school paycheck stub for Tom. So what else is coming out of his paycheck? Well, there's federal income tax, and this is a progressive tax, meaning that your tax rate increases with your salary. And the key thing to note here is this is marginal tax brackets, meaning additional. So everyone is taxed the same on the first X dollars, then people who are earning X plus some amount are taxed differently than people who are earning X plus that amount are taxed differently on that new amount. These are marginal taxes. Many states, though not all of them, Virginia does, have a state income tax. So when we're calculating our own budgets, we need to take into account both the federal tax and whether or not we're paying a state tax.